Hello all, thank you for joining us today. Today's presentation will be led by Athreya, research analyst at ithought. He will be taking you through the widely spun jungle of the Indian telecom sector. India's telecommunication network is the second largest in the world by the number of telephone users. This sector is valued at more than 3,000 billion rupees and expected to grow between 7 to 9% CAGR. There are so many trends to watch out for in this sector, ranging from the rapid expansion of the IoT ecosystem, focus on cybersecurity, to the rise of AI. Without any further ado, let me pass on the podium to Athreya so that he can carry on with his presentation.
Thank you, Tarun, for the lovely introduction. Before I begin, I just wanted to check I'm sharing the screen correctly, right? So you can see my screen.
Yes, Athreya, it's
slides.
perfect.
Yeah, great, thank you. So, good afternoon, everybody. Thank you for taking the time out to attend another TRUBLU webinar, or 100% large cap product. So today we're going to be talking about the Indian telecom sector. This sector contributes to over 7% of India's GDP, which is roughly close to $250 billion. The telecom sector is the bedrock of the communications and digital era. It is an enabler of digital transformation with its arms and influence across industries, whether it is the retail industry, edtech industry, fintech industry, healthcare industry, you name it. You need the telecom infrastructure to do anything online. If telecom innovation or infrastructure did not exist, its software and internet applications built on top of it also wouldn't exist. We had the once in a lifetime pandemic, which happened 4 years ago, and we could not have survived the pandemic in the present day and age without software and internet based apps, and even including the app we are taking the presentation or the webinar today on. So the telecom sector is extremely crucial in the day-to-day life of all individuals. So let's take a look at how the sector has evolved in India over the years. Initially, this industry was actually functioning as a department of the Indian government. And the Department of Telecommunications was actually part of the Indian Postal Services till 1985, and it was only separated in 1985. The Department of Telecommunications handled the telecom services for the entire country till 1986. And in 1986, MTNL and VSNL were spun out as corporate entities for providing telecom services to Delhi and Mumbai. They were also providing international telephone services as well. The 1980s was actually the phase of the license Raj. All of us would have heard a lot of stories from our family members about them waiting for months or maybe even years on end to obtain one telephone connection. So the Department of Telecommunications actually retained the responsibility for providing services to other parts of India, and this was actually subsequently was corporatized as BSNL in the late 1990s. Moving on to the 1990s, as the Indian economy liberalized, there were reforms in the telecom sector too. The National Telecom Policy of 1994 and 1999 opened the sector up to private players comprehensively. There were roughly 14 players who received licenses to operate in various telecom circles and metro cities. And generally, in most of these circles, they are only allowed 2 private players and 1 PSU player. So before opening the sector up, for over 50 years, between 1948 to 1998, the tele-density only increased by 2 percentage points. So there was no increase in penetration till these reforms took place. The initial reforms happened in 1994, but was further accelerated in 1998, which provided for a migration from a fixed license fee to a variable revenue share based license fee, which still exists in the present day and age. Internet services were launched in 95 by VSNL, and the internet sector was opened up to private players in 1998. Even pricing in the initial phases was regulated by the government, and the government mandated tariff packages for all customers and all telecom companies. With the introduction of private players in the sector, the private players actually wanted an independent regulator who did not favor the PSU, the public sector players, as they were very afraid that the regulations would be in favor of the public sector. And this was why TRAI, that is the telecom sector regulator, was formed in 1997 as an independent regulator to support the growth of the telecom sector and to ensure that there is fair play between the PSUs and the private sector telecom players. Moving on to the 2000s, this was the decade of exceptional growth in the telecom market. The Indian government liberalized the telecom policy in March 2000 and started issuing many licenses and reduced the fees payable by telecom operators. So there was rapid growth in the telecom market, and there was a huge reduction in tariff. Telephone connections increased by 20x to 90 crores by the end of the decade. And the tariffs actually reduced from 16 rupees per minute in 2000 to rupees 2 per minute in 2006. So with the entry of the private sector players, there was huge increase in the penetration levels, and there was also a lot of competition, which reduced to the ARPUs reducing, which made it very affordable for everybody. Also in 2005, the FDI limit was increased from 49% to 74% in the telecom sector. So this meant that in the 2000s, the Indian telecom market became the fastest growing telecom market in the whole world. So this is a chart showing the number of the growth in the number of telephone subscribers in India from between 1980 to 2011. In the 1980s, because of license Raj, and there was also not much investment, and there was not much tech development as well. There was a lot of slow growth, so tele density didn't really improve. The number of subscribers only grew by 10% CAGR. However, in the 1990s, it was the first phase of reforms, and private sector started to enter the industry, and there was a slight increase or uptick in the subscription base. However, you can see that in the 2000s, there was an exponential growth, like almost a straight hockey stick like growth, wherein because as competition increased and costs reduced, this led to stellar growth. While the market grew at a whopping 35% CAGR in this decade, private sector players like Bharti Airtel actually gained a lot of share and grew at 70% CAGR in this period. And there were around 90 crore telephone subscribers by the end of 2011. So what happened post 2011? Because at the end of the decade, at the end of the first decade in the century, it seemed like the telecom sector was the place to be. Post 2010, a lot happened in the sector. It was the decade of consolidation. It began with the controversial 2G spectrum allocation, wherein licenses were subsequently cancelled in 2012. Subsequently, there was a retrospective Vodafone tax ruling, which actually dampened the investment climate in India, and especially so for the telecom industry. To pile on to this, the industry also had to face the retrospective AGR tax demand from the government. Therefore, the industry actually was already in a dire state before the launch of Jio. And subsequent to the launch of Jio, and because of their predatory pricing, the fate of the industry was actually sealed. And this led to a huge consolidation in the sector. If you look at the image on the screen, you can see that at the beginning of the decade, or at the beginning of the century rather, there were just 3 crore subscribers. And by 2011 or 2012, the number of subscribers increased to close to 90 crores. That was the phase of extreme growth for the sector, wherein the industry itself was growing above 35%. Subsequent to that, you can see that the telecom sector, the subscriber base has not really grown much. It is only right now at 118 crores. And it is growing probably in the low single digit phase. And this is how the market share has evolved over the past 2.5 decades. At the at the beginning of the century in 2000, the public sector players had a 95% market share, and within a few years, the private sector players were able to garner over 40% market share. And right now, the private sector players have over a 90% market share, and their market share continues to increase. This has been probably the clearest industry where there has been a value migration from the PSUs to the private operators. And this is probably the fastest value migration which has happened in any industry. If you take a look at the market share just over the past decade, you can see that in the beginning of the, in 2013, there were more than 10 players. Whereas right now, there is probably, 3.5 players, so to speak. And Bharti Airtel is probably the last man standing, and is one of the only players who was in existence in 2013 and who's also in existence now, and who has been able to gain market share over this period of time. Vodafone also exists, Vodafone Idea that is, but they have been steadily losing market share over the past 5 years. So this is an image from the book Capital Returns by Edward Chancellor, and this talks about the capital cycle of the industry. Actually, this image perfectly encapsulates the telecom industry. Every industry goes through a cycle, and in the first phase, when there is no competition and there is only blue skies on the horizon, many players get into the sector, and there's also a prospect of high returns. This was the first phase, was the phase between 2000 and 2010 in the Indian telecom sector. In the second phase, because of rising competition, returns started falling below the cost of capital, and the share price started underperforming. This was actually the phase between 2010 and 2016 till the launch of Geo for the Indian market. Subsequently, as as the competition also starts increasing, and as the industry starts consolidating, and a lot of firms exit because of the business climate or the industry climate, investors also start becoming pessimistic because the share price starts underperforming over long periods of time. This was probably the phase between post the launch of Geo till 2020, and subsequently, because the supply side started consolidating, and the pricing power also started emerging, the returns of the at least the top players has started to improve and has increased above the cost of capital. And you can also see the share price start rallying in the past few years for the telecom sector. So this perfectly encapsulates how the telecom sector are the cycles of the telecom sector over the past 2.5 decades. Now, so let's talk about Reliance Jio and how they disrupted the Indian market. Jio was probably the biggest startup in India. The Reliance had spent over 1.5 lakh crores even before the launch of their service. They were always thinking big even before their launch. They wanted to be the number one player right from day one. And to achieve this, they focused on affordability and scale to disrupt the market. This is the number of internet subscribers in India. And you can see that this also includes mobile broadband, but you can see that there has been an exponential growth even in the internet subscribers over the past decade. The number of internet subscribers actually started rising even before the launch of Jio in between 2014 and 2015. This was because of the higher penetration of 3G and lower cost smartphones, and the increasing internet penetration and knowledge as well. However, post the launch of Jio in late 2015 and early in 2016, the number of internet subscribers scaled up exponentially. And you can see that from just 2 crore internet subscribers in 2013, There are right now close to 90 crore internet subscribers. However, in the past, post this exponential growth, as the penetration levels have increased, growth rates in this space have also matured to high single digits in the past few years. And another important trend which has occurred over the past decade is that post the launch of Geo, the cost of data has crashed substantially by over 95%. From roughly 240 rupees per GB of data, it is right now close to 8 to 10 rupees per GB of data. Another important trend is that the penetration of smartphones, which is only at 15% in 2014, is right now close to 67%. And it is estimated that smartphone penetration would go to over 93% by 2030. And this is the amount of data usage per month in India. And the data usage per month was only 90 MB in 2015. And this has also scaled up exponentially over the past decade to 20 GB a month. This of course coincided with the crash in the cost of data as well. So right now the data consumed is around 20 GB a month per customer. Data affordability has actually transformed various sectors. In the past decade, Mark Andreessen has famously stated that software ate the world. And there have been a lot of software and internet-based companies, or Web 2.0, as they call it, which has actually transformed various sectors, whether it's finance, fintech, you know, how the content is consumed. Interestingly, in the last IPL media auction, the digital rights went for a higher price than the TV rights, and this was the first auction for specifically for the digital rights as well. So every industry actually has been touched or transformed by the internet and various software providers. However, one thing to note here is that even though the last decade was the decade for software based companies, and even though the telecom providers were the backbone or the base for these industries, they did not capture any part of the value creation in any of these sectors. And they have started to address this, which we would be looking at in future slides. Another important thing to note is that even the central government and various state governments have been able to take advantage of the democratization of data and smartphone usage to improve public governance in India. There has been a stellar change in the method of governance and distribution of public services over the past decade, whether it is in the form of the KYC or Aadhaar, UPI, and DigiLocker, and probably more importantly, or most importantly, the direct benefit transfer scheme, wherein uh, cash is transferred directly to the bank accounts of people instead of being distributed in forms of physical cash. So now that we have seen how the sector has evolved till now, let's take a look at the financials and the revenue drivers of the sector. This is the revenues of the sector over the past decade. Right now, the sector's revenue is over 3 lakh crores, 3 lakh 30,000 crores. And you can see that the sector has not seen stellar growth in terms of revenues over the past decade. There's only been a 5% CAGR. This is probably because, of course, because of the introduction of Geo and their price war, and the price war which ensued post that. Between 2017 and 2021, if you notice, the revenues were pretty much flat, and it has only started increasing in the past few years, as there have been two price hikes subsequent to that. And in this period over the past decade, while while the number of customers has actually doubled in the past decade, the revenue growth has not been stellar because the average revenue per customer has actually declined by more than 30%. And this is the tele-density levels. So tele-density is nothing but the number of telephone connections per 100 people in a specific area. And the tele-density at the beginning of the century was less than 1%, and right now it is close to 85%. So the telecom sector is actually a pretty much mature industry with high penetration levels in its core areas. the customer base is actually increasing only at a 2 to 3% CAGR. However, if you look deep into the teledensity data, there is actually a divide between the urban teledensity and the rural teledensity. The urban teledensity is actually higher than 100%. This is because people have more than one device, and there's a lot of smart devices as well. So they have more than one connection. Also, in India, many people have dual SIMs and so on. Therefore, in urban parts, the penetration levels are very high, and it is probably bound to increase or stay at the same pace in the future because of different connected devices. However, in rural areas, while there has been a good increase in penetration levels from 40% in 2013 to 60% right now, there is still a huge headroom to improve in rural areas, and that is where probably the core of the growth for the industry can come from. If you look at the revenue market share across various sub markets in India, one thing to note is that while PSUs have over 10% of the subscriber market share, they only have roughly 5% of the revenue market share. So they are not able to gain wallet share from their customers. Another thing which is blatantly obvious from the chart is that Vodafone is non-existent in rural areas or the C circle or the C circle because of their underinvestment in their network. Geo is dominant across across circles, whether it's in metro cities, B circle or C circle. However, they are significantly more dominant in the B and C circles because of their ability to attract price conscious customers and because of their better network coverage, because of their higher investment in the network. You will also notice that Bharti is actually leading in revenue market share in cities. This indicates that their customer base is slightly tilted towards kind of higher quality customers. However, because of the non-existence of Vodafone in the C circle or in rural areas, even Bharti has a significantly high market share in C circle. Basically in rural areas, whereas in tier 2 cities or in the B circle areas centers, you can see that there's a significant market share difference between Jio and Bharti, and this is because of Vodafone, where they have almost a 17% market share there. And if you look at the market share trends over just the past year, one thing is clear: both Jio as well as Bharti Airtel are consistently adding customers and increasing their market share, whereas both Vodafone and the PSU guys are losing customers and market share as well. You can see that Vodafone has lost market share has gone down from 21% to just 19% currently in just 1 year, and this is on customer data. And the other players have also steadily lost market share as well. And this is broadly the number of customers each the private players have over the past 5 years. And you can see that the Vodafone Idea customer base has roughly halved in the past 5 years, whereas the Bharti Airtel customer base has seen a 20% growth in the past 5 to 6 years, whereas Geo has gained significant ground over the others and has got or obtained a huge lead over the others. Another point, and the last point on market share, is that Vodafone Idea, we saw that they have roughly 18 to 20% market share. However, they are precariously placed. Their debt to EBITDA levels is above 4 times, and after the moratorium ends in September 25, they're actually staring at huge payouts to the government in the next 5 to 6 years. Therefore, their ability to survive actually depends on their fundraising capabilities or infusion by promoters. Promoters in various media platforms and on con calls have stated that they're not going to put too much good money behind bad industries. Therefore, and recently there's news that the board is going to meet in Vodafone to raise around 20,000 crores and so on. But with the company itself losing a lot of money, losing some money, and they'll have to invest in their network for 5G and so on. And you can see the amount of money close to they'll have to pay out close to 40,000 crores per year from FY27 onwards. So 20,000 crores in this context is not a huge chunk of money. So they have to do something they have to infuse a lot of funds to survive and to, of course, grow the network. Because if they do not invest in the network, they are going to consistently lose market share to their other players. And and the other players are just going to, gain market share from them. So Vodafone is precariously placed, and it is possible that Jio and Airtel continue to gain market share in the future if this situation does not resolve. Now that we have taken a look at volumes of the industry in terms of teledensity and market share, let's take a look at pricing. This is the ARPU trend for Airtel over the past decade. And you can see that at the in 2009, their ARPU was over 300 rupees, close to 330 rupees. And subsequently, as competition increased, it fell sharply to 200 rupees. And post the launch of Jio, it fell even further and bottomed out close to 115 rupees in 2019. Right now, it is actually above. It is pulled back up and it's above 200 rupees. And it was only in 2023 that the ARPU went above the per capita GDP trend line if you take 2009 as a base. And right now, if you take a look at the ARPUs of Vodafone, so Airtel's ARPU is roughly close to 210 rupees. Vodafone is somewhere in the 150 range, and Jio is in the 180 to 185 rupee range. So Airtel actually has a 40% higher ARPU than Vodafone and a 15% higher ARPU than Jio. And you can see on this chart that the per capita GDP of India grew by close to 9% over the past eight years, whereas the ARPU for Vodafone and other companies grew substantially below that. And this is a comparison between India and other countries in terms of ARPU and data usage. And you can see that while the data traffic per customer is on par or actually even ahead of various developed economies, the ARPU per month is substantially lower than other emerging and developed economies as well. So data consumption went from 100 MB per month to 20 GB per month in the past decade, but the ARPU for the industry only increased from 122 rupees to 170, 180 rupees on average. This shows that there's clear headroom to grow for in terms of pricing. And if you look at the data consumption estimates for the future, this is given by Ericsson, they are estimating that the data consumption in India, although it's the highest in the world, will continue to grow at a high teens CAGR till 2030, and it will hit around 75 GB per month data consumption by 2030. So there is, a huge headroom for to grow realizations, as the current cost is extremely low. And this was an interview given by the chairman of the Bharti Group, or the promoter of the Bharti Group. And basically, he's stating that India right now, the ARPUs are at roughly $2.2. And he's saying that rupees 300 or three and a half, 3.3 to $3.5 is their first target. So he sees a clear path to go from the current ARPU to 300 in the next in the next few years. However, he's also indicating that the Southeast Asian countries have ARPUs in the range of $12 to $16. So he is stating that because of inflationary pressures for the cost of rentals, for towers, and other operational expenses, 300 is just the first target, and that the ARPU has actually potential to increase further to keep up with inflation. Another way to increase the ARPU is with respect to increasing the conversion of postpaid customers. So if you look at this chart, you can see that prepaid customer pays roughly 200 rupees, whereas the postpaid plan, the ARPU is roughly 400 rupees. So it is almost 2x when compared to the prepaid plan. Also, it is important to note that the Jio's prepaid plan is only at 300 rupees, whereas Vodafone and Bharti's postpaid plan, postpaid plan is only at 300 rupees, whereas Vodafone and Bharti Airtel's postpaid plan is close to 400 rupees, which is a 30% premium compared to Geo. And another important, so Geo is clearly trying to be the price leader even in the postpaid market, whereas in the prepaid market it is roughly the same cost right now, which is, of course Geo is 10 percentage lower. Another important point to notice is that if you look at the minimum recharge plans for just voice and 2G, basically 2G plans, and if you look at the data plans, there is actually a 33% difference in the cost on the realizations of a 2G or a minimum recharge plan when compared to the data plans. And that is important also because as people start moving from feature phones to smartphones, the ARPU mix will also be favorably benefited. So if you look at, we saw that the postpaid ARPU is actually almost double the prepaid ARPU. However, if you look at the postpaid mix as a percentage of the overall customer base, it is only between the 5 to 7% range for the industry. Um, Therefore, if you look at the other countries like emerging economies like Thailand and Brazil, they have roughly one third or even half of their customer base on a postpaid plan. So there is significant headroom to improve, and the migration from prepaid to postpaid will also improve ARPUs in the future. Also, it is estimated that for Bharti and Vodafone, 30% of their postpaid SIM cards are company owned and company paid. So the employees have to return the SIM cards to the company once they leave. So uh, there are dual benefits for telecom operators. One, the ARPU is also higher for postpaid customers, and the churn would also be much lower for postpaid customers. And roughly 30% of subscribers, as per industry statistics, are stating that the 30% of subscribers are still using feature phones. Therefore, as number of feature phones continue to improve to smartphones, then they would also want to utilize data, and they would go to the minimum data plan, which is actually at a 30% premium compared to the minimum recharge plan. Therefore, uh, as the shift happens from feature phones to smartphones, that itself will enhance ARPU. And if you look at the shift from if you take a look at the Indian market right now, around 12% of the customer base is still on 2G platform, whereas Ericsson estimates that by 2029 or 2030, roughly 70% of the customer base will be on 5G, and roughly one third of the customer base will be on 4G, and 2G will become almost negligent. So this can improve our ARPU. This can improve the realizations per user in two ways. One, there'll be a shift away from 2G to data plans, and of course, the overall increase in overall ARPU as telecom providers start monetizing their 5G investments. In this intermediate shift away from 2G, intermediate shift away from 2G, Jio is actually directly attacking and capturing the shift by offering devices at extremely cheap prices. They had recently launched the Jio Bharat phone, which is a 999 rupee phone, and it is the lowest cost 4G enabled phone, and it works only with the Jio network. They have the Jio Bharat phone has a 45% market share in the less than 1,000 rupee price point, and it is one of the key reasons why Jio has a leadership in rural areas. And if you also look at the annual plans for the Jio Bharat phone specifically, in both price as well as the amount of data, they are it is both cheaper as well as the amount of data provided is higher than other plans. Therefore, this actually is one of the key reasons for Geo to have a significant market share in rural areas. So another important trend is that there is a shift we saw in the Ericsson chart, that roughly two-thirds of the subscriber base will move to 5G by 2030. Ericsson projects basically that 70% of the Indian market will be on the 5G network by 2030. And McKinsey has done a study, and they have done a detailed study, interviewing a lot of customers and interviewing a lot of clients as well. So what they are saying is that just on the increase in speed of 5G and connectivity, there can be a 5 to 10% increase in ARPU. And subsequently, there can also be an experience-based value proposition wherein if a customer needs stronger connectivity to play games or stream videos, they can, pay $1 to $2 to receive a performance boost temporarily. This pay-per-use model will be useful when the network is congested or when the customer does not need higher speeds and performance at all periods of time. So this is really possible in the future when because of the advent of 5G and the speeds really start hitting very high levels, and the data needs for cloud gaming or for streaming 4K or maybe even 8K videos in the future start improving. Therefore, McKinsey kind of predicts that there will be a 15 to 20% ARPU increase just on the shift, just based on the shift from 4G to 5G. And these kind of differentiated tariff structures have actually worked out in Hong Kong and have increased the realizations by 20 to 30% in the past 4 to 5 years. Based on McKinsey's survey, roughly 7% of consumers would be willing to use these kind of 5G boosters or differentiated tariff products at least 7 times a month for a $1 per use product. Therefore, to summarize, there will be a 3 to 6% or 8 to 9% increase in the in the ARPU because of these differentiated tariff boosters. Additionally, because of the advent of 5G and network slicing and so on, they can also offer businesses guaranteed premium network performance, and they can probably even make they can also make private networks and orchestrate that. Based on McKinsey's survey, roughly 15 to 20% of customers would be willing to pay 10 to 15% more, leading to an roughly 2 to 3% increase just on in the B2B side on the ARPU. So overall, even an improve shift to 5G can also lead to an increase in ARPU, as the investments have already been done in the till now in the past 3 to 4 years. And these are just some of this is just what some comments from the CEO of the Airtel business segment leader. So he was saying that because of 5G, the use cases in the B2B space is it's constantly evolving, and it can actually be. He was saying that there's a lot of expectation that 5G will make more money in B2B than B2C, and 5G for enterprises actually brings a huge opportunity to digitize the whole backend for factories, industry 4.0, whether it's warehouses and of course in the supply chain and ports. Therefore, every industry is looking at how they can utilize the faster speeds and lower latency to revolutionize their sector. These are just some of the potential use cases because of 5G. It can be used in e-commerce, healthcare, analytics, and of course in manufacturing as well. So we stated that the telecom sector is a pretty mature industry. However, if you take a look at the fixed broadband penetration, there are only 3.6 crore fixed broadband connections in India. This is in comparison to 30 crore households in India. Therefore, there's a huge headroom to grow even in broadband. And with the advent of 5G and with fixed wireless access possible, broadband can actually be expanded in all rural areas, even without the capex spends or the infrastructure rollout of optical fiber and so on. Therefore, broadband is another another subsegment which will benefit from the penetration of 5G. So I was previously talking to you about how in the past decade that value was actually accrued to not the telecom players but all the software players around it. So the telecom companies have started, realizing that none of the value is coming to them, and they have realized that they have to be in adjacencies, and they have to control those adjacencies to create value for themselves. So this is one of these telecom players. Each telecom player has the top ones at least have 30-40 crore subscribers, and of the logical extension of that is to offer finance to these customers. Geo, of course, has a separate company in terms of Geo Financial, but Airtel has a payments bank, and in the past few years they have started originating loans, so they do not take any balance sheet risk. However, their customer base is so huge that they can make a lot of money by if they're able to monetize even a small portion of their customer base. And they have also stated the company actually has a co-branding tie-up with Axis Bank, and they have also stated that in the future they're going to add more products in insurance and even in gold loans. With the huge customer base, all the telecom companies have also started monetizing their different applications and their customer base by in the form of advertisements, and they provide a common platform for a lot of brands to connect those brands to their consumer to Airtel's customers via Airtel's different apps, whether it is Airtel Thanks, Wink Music, or Airtel Extreme Video, and so on. And all telecom players, whether it's Vodafone or Jio, are following this strategy as well to increase the value creation amongst them. Another main or key market is the enterprise market. And the enterprise market contributes roughly 15 to 20% of the revenues in India. However, in developed markets, they contribute roughly 30% of revenues. And this market is actually expected to grow at a high teens growth rate in the next few years. And the EBIT margins vary between between the different subsegments in the enterprise market. However, the capital intensity is generally lower than the core telecom business, as the infrastructure is already built out, and hence this makes it extremely attractive for telecom providers to enter into. So the enterprise market is expected to grow anywhere between in the high teens and maybe even close to 25% over the next few years. And the different subsegments are CPaaS, which is communication as a service, or data centers, where Airtel has separate subsidiary in the form of Nextra. And of course, cyber security is another huge area, and there are a lot of IoT devices and IoT itself, which is going to only expand in the future because of the increased penetration of 5G. And even basically all telecom operators are actually focused on scaling up the enterprise suite of services. And this is from Geo's investor deck as well, and even they are talking about how they have a high bid rate in government contracts, and how 1 in 4 customers are using 2 or more Geo services. Why the enterprise market is important is that, one, the growth rate is very high in the near term, and the services provided by the telecom providers here have high margins with low capex spends, and the ARPU and the ARPUs are significantly higher. It can be anywhere between 6,000 to 10,000 rupees, and the churn will also be significantly lower. The last point, or the last revenue driver, which last strategy by the customer, by the telecom providers to gain customers and to ensure that churn is lower, is that all telecom providers have started bundling their services. This is they're basically bundling all their services into one subscription to increase their ARPU and to increase their customer base, and of course reduce the churn. So broadly, the mobile plan, the DTH plan, the landline plan, and fiber broadband is all accumulated into one plan, and therefore the ARPU also increases if when compared to just selling one plan to a customer. And not only the data plans or the different services, even media content has become bundling of media content has become a differentiation for these telecom players. With the increase in penetration of OTTs, telecom providers are actually bundling services with OTT platforms, and this actually has increased their average realization per user or ARPU by 10 to 15%. What is the advantage for the different players? For customers, they get a reduced cost, and they get access to these OTTs at a lower cost. For telecom operators, the ARPU increases or the realizations. And for OTT platforms, they are able to acquire customers at a lower cost of customer acquisition, at a lower customer acquisition cost, and they're able to increase distribution easily. Therefore, these kind of revenue sharing agreements are possible in the future with other kinds of companies as well. Maybe even say if cloud gaming becomes a big thing 5 to 10 years down the line, this kind of revenue sharing agreements can happen even in that sector as well. So there was a survey done by Amdocs, and in that survey, it was stated that 44% of the people who were surveyed said that bundling of media content was the sole reason for them willing to pay a higher bill for whether it is for higher broadband or mobile bill. Therefore, this is also a key strategy for companies to increase their customer base and the wallet share. To summarize the revenue drivers, increase in teledensity, and gain in market share from both Vodafone and PSUs, an increase in ARPU because of a continued increase in data usage, and of course a shift from feature phones to smartphones, and a possible differential pricing in the future for 5G, and a shift from prepaid to postpaid can also improve ARPUs as well. Also, broadband penetration is extremely low right now, and that also has significant headroom to grow. And enterprise sales is is unlocking different avenues for growth and is expected to grow at a high teens, close to 20% growth rate in the next few years. And bundling leads to reduced churn and higher ARPU. So this is actually the revenue growth and the revenue mix for Bharti over the past 6 to 7 years. And you can see that the revenue growth was actually negative in 2019 and 2020 because of the disruption in the market, and has subsequently started growing rapidly. And if you look at the subsegments which has grown strongly, of course, it is the mobile segment because of because they had a contraction in 2018 and 19, and the ARPU started increasing from there. And Airtel business has also started accelerating, and it started growing in the high teens rate. And the home segment, which includes the broadband segment, is now starting to really accelerate and grow at even at more than 30%. However, the mix of the home segment is much lower. It's pretty stagnant because the realization for the broadband has actually halved in the past 5 years because of increased competition and because of the entry of Jio as well. However, if you look at the revenue mix over the past 7 years, the Airtel business has gone up from 14% of revenues to roughly now at 19% of revenues. Therefore, whatever we spoke about, you can actually extrapolate. You can see how it has played out in Airtel's business itself. Now that we've spoken about the revenue growth, let's talk about margins. And these are the EBIT margins for the various private sector companies over the past few years. And you can see that EBIT margins for Airtel were roughly at break even, and in the past few years they have come up to 20%. And Reliance Jio has the highest EBIT margins, which is close to 30%, and Vodafone has been consistently making losses in the past few years. And one thing to note here is that Reliance, while they have the highest EBIT margins, since they have bought a lot of spectrum over the past few years, they are actually capitalizing a lot of their expenditure as well, and therefore it's not flowing through to the P&L. And on the point of margins, the last time, if we believe that the realizations for the industry and for the industry is going to go inch up towards 300, it might it makes sense to look at what were the margins the last time the industry was at margin at realizations above 300. In the period between 2005 to 2010, Bharti Airtel's realizations were at close to 350 levels, and you can see that they have actually made PAT margins, not EBIT margins, PAT margins of upwards of 20%. Therefore, this business is actually extremely, there's a lot of operating leverage in the business, and because a lot of investments have to be made upfront to build out the network, and therefore, once the ARPUs really start increasing, and if they do reach closer to the 300 level mark in the next three to 4 years, then the margin trajectory can actually be significantly higher than what it is right now. If you take a look at the margin, the EBIT margin differential between the various companies, the network expenditure actually contributes to roughly 20% of revenues. So the network expenditure is basically power and fuel, the fiber and tower expenses, and the repairs and maintenance costs. And you will notice that Jio is the highest spender in the network OPEX, and this is because of the higher fiber usage charges and their increased spends in passive infrastructure as well. This is why, because they're spending more on the network infrastructure, they have the best network coverage as well. Bharti actually has the highest repairs and maintenance cost because of their lot of subsea cables which they own. Power and fuel is also part of the network expenditure, and power and fuel is approximately around 10% of revenues. Now, if you take a look at the regulatory levies and the access charges, you will probably notice that regulatory levies are roughly in the 5 to 6% range for Bharti and Airtel. The regulatory levies are actually at at a 10% range for Bharti and Airtel, whereas the access charges are at a 5% range for Bharti and Vodafone. My bad. Whereas if you look at the access charges and regulatory levies for Jio, you will notice that it is slightly lower than Bharti, and the access charges are much lower. This is because the spectrum usage charges was actually changed by regulation, and the government removed the spectrum usage charges on new spectrum acquired. Therefore, as new spectrum continues to be acquired, and as Geo has a higher proportion of new spectrum acquired, the regulatory levies will continue, as a percentage of revenue, will continue going down. Also, the access charges are actually charges for outgoing calls terminating on other networks. And of course, since Bharti and Vodafone have more enterprise customers, and since they have a lot more 2G customers and voice-only customers as well, their access charges are significantly higher. They're at there's a 5 to 6% difference in margins just because of this. So in the future, there is actually headroom for Bharti and Vodafone to increase their margins when compared to Reliance Jio. Also, right now, the license fees in terms of spectrum license fees are at 8% of adjusted gross revenue, and there is a case to be made that this 8% should maybe fall down significantly in the future. And if that happens, then the margin profile of these companies would significantly be changed, and for the better, of course. And if you also take a look at the depreciation and amortization, you can see that there's the depreciation amortization is much lower for Jio when compared to Bharti, despite the fixed assets being on similar lines, and the cap expense for Jio being significantly higher, especially in the past few years. This is because a lot of their spends, a lot of their spends are being classified as work in progress, and it is only when the spectrum starts to be get used actually that they will be moved over to the property, plant, and equipment, or the gross block, and only in subsequent years will the depreciation amortization kick in. Therefore, this is actually a headwind for Reliance Jio in the next few years. And this could potentially lead to some kind of tariff hikes if they want to, because they'll want to showcase higher margins, EBIT margins as well, and especially if they're going to go for an IPO in the next few years. So we have the industry is actually extremely capital intensive, and you can see that the number of base stations has roughly doubled over the past 5 years, from 16 lakh base stations to now over 30 lakhs. This has led to high capex spends over the past 5 years. The nature of the industry is that it has to spend upfront to garner revenues later on. And this is the capital intensity of Bharti Airtel over the past decade. And you can see that uh, the capex as a proportion to revenue has gone up. Actually, it went up between FY18 to 20. It went up and even hit close to 35%, and has now fallen. It is close in this, fluctuating in the range of 20 to 25%. However, the absolute amount of capex, has increased and is roughly at 30 to 35,000 crores per year. And this is the capex per revenue percentage of Geo. And it is while for Bharti it was close to in the 25-30% range. For Geo it is significantly higher. They are really spending a lot on building out the infrastructure and on acquiring spectrum as well. Therefore, yeah, so you can see that the capital intensity of the industry is extremely high. However, it is estimated that the capex or the capex spends has actually peaked out and will probably be flatlining at the $11 billion range for the industry as a whole over the next few years. Therefore, as the industry's revenues continue to grow, the capex as a percentage of revenues will continue to fall. And this was from Bharti Airtel's con call, and you can see that he's clearly stating, the CEO is clearly stating that the capex has peaked and that the capex will continue to moderate in the next few years, and that most global telcos operate at a 15 to 20% capex to revenue ratio, and he expects that Airtel will also operate at that level in the near future. Finally, if you look at the return ratios of the sector, you can see on the green line is Bharti Airtel and the purple line is Jio. You can see that in the beginning of the century, Airtel was making upwards of 30% ROCE. And of course, because of the competition in India and their expansion in Africa and so on, their return ratios collapsed to high single digits, and it actually went negative during COVID, and it has come back and to 12% in 2023, which is actually the highest in the past 13 years. Therefore, as because the capex has peaked out, and it looks like ARPUs are starting to going to move, and it is stated that it is expected rather that post elections there's going to be a 20% jump in the telecom prices. Therefore, in the future, the ROCs are only going to go up, and Bharti has actually stated that at a 300 rupee ARPU level, the ROC will be upwards of 20%. And this is the ROE tree for the industry, and you can see that the ROEs were in the single digits and pretty abysmal in the past decade. However, in 2023, the ROE actually was at the highest level over the past decade, and it was at 10%. And this was driven by 6% PAT margins, which was also the highest in the past decade, and of course a high equity multiplier or a high leverage as well. However, the leverage ratio is expected to come down in the near future, and the PAT margin is expected to grow from 6%. It's expected to double and be in the low teens at between 12 to 15% in the next few years as well. Therefore, the return ratios are on the right path for the industry. Now, coming to the industry outlook, the revenue outlook, the revenue is expected to grow somewhere between 13 to 14% in the next 3 years, and this will be driven by a subscriber growth of 2 to 3% and realization or an ARPU growth of somewhere in the double digits. if you take a look at the EBITDA outlook, the outlook is that the cash EBITDA would see a high teens growth rate. They would see a 15%, 15 to 16% CAGR over the next 3 years. There and with deleveraging, reduction in capex, etc., there will be a huge financial leverage as well, and therefore the PAT growth will be much higher than 15 to 16% in the next 3 years. So the PAT growth can actually be even in the 30% range, depending on how much deleveraging happens, and the reduction in capex intensity as well. And finally, if you take a look at the valuations are actually, if you take the EV EBITDA levels on a rolling 12-month forward basis, is roughly in line with the averages over the past 2 decades. So despite the better industry structure, better growth outlook, and the capex peaking out and so on, the valuations are not too high. And if you actually notice, Bharti the stock has really done well over the past 2 to 3 years. But the price performance is actually was actually deserved, and was driven by earnings growth as well. Now moving on to the risks. Of course, regulation is the main risk. Technically, the telecom sector is kind of a public good. It has become a public good for everyone, and therefore, if it becomes a duopoly, the government could start capping prices in the future. And when the telecom sector was doing really well in the 2000s, and in 2010, the spectrum cost was actually the highest in the world. Because the sector was doing so well, we saw the ROCs being at 30% plus. Therefore, um, the high spectrum cost also led to the collapse of the sector. Therefore, regulation is a big risk in the sector. And of course, a delay in ARPU, an increase in ARPU, and if the industry is not able to monetize 5G, then that could also delay the improvement of the return ratios. And recently, Reliance announced a merger of Geo Cinema with Disney as well. Therefore, a bundling of Geo Cinema and Disney could actually increase the customer acquisition cost for the remaining players as well. Further, a potential possibility is that right now the government is actually 33% owner in Vodafone, and if Vodafone is unable to raise funds, say 2-3 years down the line, and they're unable to pay the government, there'll be significantly more dilution, and the government might have a bigger stake. So they could probably merge in the future. It is a potential possibility, but they could merge maybe any of the PSU companies with Vodafone Idea as well. So that brings us, to the end of the telecom presentation. So let me just spend a few minutes on the product. So the TRUBLU is ithought's unique, or 100% pure large cap product, and it is a product which has a high active share, and which does not invest in any mid cap or small cap ideas. Whereas if you take a look at a lot of mutual funds, even in their large cap funds, to generate some alpha and beat the index, they will have a lot of small cap ideas. However, we do not do that. So we have a high active share, and we stick to the Nifty 50 stocks, and we stick to the label. We have around 23 products, and we have high market, and only in large caps 23 stocks, and we have only large cap stocks. We have no exposure to small and mid cap stocks. And this was how the product performed in past drawdowns. So we not only look for to capture the upside potential, we also look to minimize the downside risks for our clients as well. Therefore, we did really well in the last 2 market downturns, which happened in the last 2 years. And yeah, so the numbers speak for itself. So our endeavor is that we want to, in this product, we want to deliver 200 to 300 basis points alpha over the benchmark returns. That is, the benchmark in this case is the Nifty 50, and the time frame we like to deliver this is on a rolling 3-year basis. So if potential investor who's looking at this product should have a minimum time frame between anywhere between 3 to 5 years. Of course, the longer the better. The product is kind of suitable for people on both ends of the spectrum. One, the first time investors who are new to equity markets and who want to invest in a PMS. And second, people who are at the end of their careers and who want to build a retirement corpus as well. Additionally, institutional investors and family offices, this product is actually suited a lot for these two categories of people as well. And this is the investment teams led by our founder, Mr. Shyam Shekhar, and Mr. G.R. Balaji, who is also the head of research and co-fund manager for the product. We also have a very diverse team and very accomplished in various aspects of life as well. And this is the portfolio performance for the product. And yeah, so the numbers are on the screen. So we have done roughly 26% of the past year and 17.5% CAGR over the past 2 years. And these are just some of the terms of the key terms for the product. So the minimum investment is roughly 50 lakhs. And there are two fee structures. You can either opt for a fixed fee or only a variable fee. And if you have any doubts with respect to that, you can contact any of us. We would love to take you through that on a one-to-one call as well. And yeah, so that brings me to the end of the presentation for today. If any of you have questions, please feel free to put them on the chat box, and I would be happy to answer that.
Hi, Athreya. I'll be enabling the chatbot right now, so the attendees can post their questions there.
Yeah, so I think there's one question so far. How much? The question is from Mr. Karthik Raja. He asks, when will the 4G and 5G license be expired, and when is the re-auction planned, and how much would be the estimated license fee? So actually, speaking about the license fee, because of the state of the sector over the past decade, there has been no significant change in the the 2010 price was actually taken as the benchmark, and that was taken as the benchmark for all subsequent auctions every year subsequent to that. And it is only it is only in the last auction that there was some kind of reduction, but roughly it's the same. The price etc. has not significantly changed. And on the auctions for the licenses itself, it happens every year, and it is it's a debate between the telecom providers, between all the stakeholders in the industry. So between the government and the telecom providers. So there will be definitely an auction in 2024 as well. And in the past auction, Jio actually, I think they spent around 60,000 crores. They had acquired a lot of low band as well as millimeter, 26 gigahertz spectrum for potential 5G use cases in the future as well. So therefore, it'll happen every year. So it's not a one-off situation. And I think next question is from Mr. Venkatesh. So how does the India telecom market compare? He asked how the Indian telecom market compares with the Chinese telecom market in terms of maturity and prospective growth. Therefore, in that context, I think I had spoken about. The Indian telecom market in terms of maturity is actually pretty mature, except in terms of fixed line broadband. So if you take a look at connectivity, connectivity is pretty good. Maybe in rural areas there is a potential possibility to improve. But if you compare the ARPUs from China to India, so India is roughly at $2, whereas China is, I think, at $5 to $6 per month per customer. So yeah, therefore, if you take a look at ARPU realizations are significantly cheaper in India, whereas density, whereas usage of data usage and things like that is pretty high and in India and one of the highest in the world. Yeah, so Mr. Karthik has asked whether Jio's telecom debt is on Jio's book or Reliance's book. So right now, I mean, Reliance has created a subsidiary, Reliance Jio Infocom. So there is a subsidiary. They are providing, their own financials, and even so, they do have a lot of debt, in that subsidiary as well. And of course, because it is a, it is a, and of, in 2020 during COVID, they had diluted 33%. So Reliance actually only owns 67% of Reliance Jio, and therefore all their investors as well will be very mindful of how much debt, etc., and what the related party transactions are in that subsidiary. So therefore, right now the telecom debt is on Jio's book. Of course, in the past, there would have been some cross subsidies between the holding company and the subsidiary company as well. Um, yeah, and Mr. Pandi has asked, how to Reliance has multiple businesses and how can we calculate the future earnings? Yeah, so that is definitely true. So Reliance has a lot of businesses. It's very hard to find their now to understand. They don't really provide in-depth disclosures when compared to someone like Bharti or even Vodafone. However, you can look at the segmental revenues for Reliance, for Geo, or even any of their other segments, and you can look at their annual reports. And even Reliance Geocom provides a separate annual report. So all their subsidiaries every subsidiary has to publish their own annual report. So you can look at that to look at the business performance and the your own estimate of the future as well. Thank you, Mr. Karthik. Yeah. Yeah. I think Mr. Arun's asking whether there's a competition from SAT-based internet providers like Starlink. So yeah, that is definitely an interesting question. So I think so far, globally the penetration levels for satellite-based internet providers like Satlink, and even Mittal, the promoter of Bharti, has a company which is outside Bharti Airtel, which is doing well. I think it's called OneWeb, which is doing well in other parts of the world, especially in Europe. Therefore, yeah, I mean, we have to keep we have to keep we have to be aware of these trends and how they evolve, and how these companies, how the telecom players, incumbents, respond to these trends. But how one thing to note is that broadband penetration is extremely low in India, and hence it doesn't really it doesn't contribute too much to the revenues. And the coverage for mobile networks is pretty much there in most parts of the country. So, and the cost is also extremely low, whereas the SAT based internet providers, the cost is pretty high. And yeah, so I don't think in the near future it will have too much of an impact, but yeah, we have to wait and see how things play out. Mr. Navi Kumar asks, is there any possibility of a new private player entering the market? I mean, if a new private player wants to enter the market, I probably would say it is best for them to acquire Vodafone. And Vodafone themselves are struggling, at least so far, to find anyone to fund their growth. Therefore, it looks like no new private player wants to enter the market. But of course, if the industry starts, if the return ratios really improve, and the industry really does well in the next 2 years, maybe someone could look at taking over Vodafone as well. But we can also wait and see how Vodafone also raises funds to see if any other player is interested in it. Yeah, thank you everyone for your kind words. Yeah, Mr. Shankar Narayan asks, how can we expect the operating expenses to network operating expenses to grow in the upcoming years? So that's also a very good question. So um, it'll probably grow, in the high single digit to lower double digit range, because as because of inflation itself will lead to an increase in the operating costs, whether it's employees, power and fuel, and so on. And these companies are they are investing a lot in expanding their network, especially the top two companies, and which will of course lead to higher spends in optical fiber, passive infrastructure, and things like that. Therefore, yeah, there will be, it'll probably grow at close. It will be similar to the revenue growth, I would say. So there's not going to be much of a gross margin improvement. Everything else will. But there's of course, apart from that, there's a lot of operating leverage which will kick in post that, and therefore there will be a huge margin improvement in the future as well. Yeah, thanks Arun, thanks Mr. Pandi, and thanks Mr. Karthik Raja. Um, while unlimited growth potential is presented, other than regulatory risks, what are the big challenges? I mean, I wouldn't say it is actually unlimited growth. Even in the growth, because there is going to be a limit. Pricing cannot increase above a certain point, especially when especially when the industry itself has become like a public good. I mean, if you think about it, why are the telecom companies not increasing the prices before elections, and why are they waiting for elections to increase prices? Therefore, this is, it'll actually increase inflation and things like that. It'll become a political issue, and therefore, it is not unlimited growth, because the ARPUs can only increase to a certain extent, and the subscriber base itself has seen significant penetration, and therefore, there will be a good growth, but not unlimited growth. I would like to, rephrase that. But what are the big challenges for Bharti and Jio? Of course, Jio. The big challenges, apart from regulatory risk, would potentially be, an entrant, a new entrant in the sector, if they acquire Vodafone, or if Vodafone itself kind of merges with any of the PSU guys. Then there's there's a privatization which happens that could potentially be a big risk. And of course, the biggest risk is that there is status quo in the sector. There is no increase in the average realizations, and that will lead to a delay and deterioration in the or a flatlining in the return ratios, and that can actually lead to decline in the stock prices, because the consensus is taking into account that there will be an improvement in ARPUs, and that there will be an improvement in the return ratios. So with respect to the stock, the status quo in the ARPUs, and if the ARPUs do not hit 300, maybe, if they do not even hit 250, but in the next 2 years, 2 to 3 years, then maybe, there could be some kind of derating which takes place. Can Jio afford to keep up pricing pressure on Airtel? Yeah, that's the $1 million question. And so far, it seems like they are continuing to put pressure on everyone in the industry, whether it is mobile connections or even on broadband. However, since they have diluted, maybe 30% stake, and it is expected that there is going to be some value unlocking in the next 2 to 3 years, I think it is safe to say that Geo is not going to keep up the pricing pressure on the other peers for too long. I think even they would want to start making a lot of money, especially as the capex spend in the last 1 2 years for Geo has been phenomenally high. As Geo is probably the only company in India to roll out a 5G standalone on the standalone architecture. Airtel has actually rolled out on the NSA, non-standalone architecture, and basically piggybacking on their 4G spends. So Jio has actually upfronted all the capex in the past few years itself, and they would want to see some kind of return. I don't think, they would be able to keep up the pricing pressure for too long. But yeah, you never know. I mean, Reliance has done a lot of. They are. I mean, Reliance is one company which can withstand the pressure in the industry. But my guess would be that they would not. They would budge in the next few years. I think if there are no more, not any more questions, then we can probably wrap up for today. Thank you all once again for joining. Tarun, do you want to close it, or do I go ahead?
Yeah, I think we can, close the webinar. Thank you all for joining us today. Thank you,
Yeah,
Athreya. Thank you for a lovely webinar.
yeah,
Thank you.
yeah, yeah. Thank you, everybody.